Firstly, I think the key for me is that we've had a significantly improved second half financial and operational performance. Certainly we've experienced top-line pressures, but we announced the profit improvement program, and we've seen some very good benefits from that in the second half of the year, to the extent of about 212 million rands worth of improvement in profit, which we've managed to measure in the business. The business itself, although under pressure, remains exceptionally good in terms of cash generation, and cash generation is up 5% period on period, up at 2.7 billion rand. Last time we spoke about the covenants, which weren't relevant to our capital structure, and we've managed to renegotiate those with the bank, and now we have a sustainable balance sheet, and it's got appropriate flexibility in it. We are looking at our BE structures, and we're progressing towards a better solution for our BE structures and the associated capital structure in relation to the BE scheme. So in terms of our solution, although we're still working towards it and we can't be definitive, certainly the benefits are that it will restructure and make our BE structure more sustainable. It's going to optimize our capital structure. Our current structures are tax and cash flow inefficient, and we'll resolve that issue. We hope that the ultimate solution will at least be EPS neutral to the company, and it may be even slightly positive, but let's say EPS neutral. It's going to eliminate any financing risk, because of course there's quite a big chunk of the debt which becomes due at the end of 2016. So we eliminate that risk, and we'll provide further funding headroom and really position the company to grow. So that's going to be something that we'll be focusing on in the next 6 months. Another highlight is that our Rwanda operation, Samewa, has now come into production. September was the first official month of production, and we're already going at over 60% of our production capacity. And then finally, we also internally have launched our new strategy and our new vision for the company, which I'll talk about just now. So really, when I got to the company, we were starting to really feel the competitive pressures with a new competitor coming into the market. At the same time, our economy was sluggish and various other aspects, which I will cover just now. But we immediately decided to focus on what we could focus on. And that was in terms of making ourselves efficient internally and looking at cutting costs and improving the way we did business. We labeled this our profit improvement program, and we'll talk a bit about that again just now. But certainly what it has done is it's resulted in a much better second half performance, which I want to highlight. So certainly you'll see on the top line, we are experiencing pressures in the business, and that's what you'll see in that slide. But our cost of sales in an absolute sense has gone down 7%, which I think is in the second half, which I think is a very, very credible performance after having been 15% up in the first half. What that resulted in was an overall EBITDA increase in the second half, and it resulted in a flat EBITDA year on year. And also, it meant that the margin in the second half improved slightly as a result of that. In terms of our overheads, I'll expand a bit more on our overheads in a minute, but our overheads were growing at a rate of about 15% after the first half, and we've managed to pull that back to a growth of 5%. But I'll show just now that, in fact, on a like-for-like basis, year on year, we are, in fact, down on overheads. So I really think we've done a good job in terms of that. After various other effects, our net profit in the second half then up very, very strongly. And what it results in is looking half and half as our earnings are slightly up in the second half. But of course, remembering in the first half, they were about 45% down. We put out a trading statement. So for the year, we end up at 15% or 19% down on a headline basis, 15% down on a normalized headline basis. So all in all, I think a significantly improved second half performance, which underlies our annual results.